Waking up one day to discover that your bank has collapsed can be a terrifying and disorienting experience. Being ready for potential dangers is essential in a landscape of the economy that is always shifting. A bank failure is one of these hazards, which might greatly impact people's savings and investments. Let's discuss some measures to protect yourself against a bank collapse, including being aware of the warning signs, diversifying your assets, and being informed. We'll also delve into alternative financial systems, case studies of successful navigation through bank collapses, and the long-term effects to plan for. Recognizing the signs and taking proactive measures. It's crucial to be watchful and knowledgeable about the warning indicators to safeguard oneself against a potential bank collapse. Reviewing your financial reports and evaluating your profitability, asset quality, and capital sufficiency can help you monitor your bank's economic well-being. What really to keep an eye out for? Troubles, just like the following, are the signs to look out for: an increase in loan defaults, declining financial reports, liquidity problems, mismatch in maturities between assets and liabilities. Another great idea is to keep up with more significant economic indicators like inflation, unemployment, and governmental policies that may influence the banking industry. You can easily take proactive steps to reduce the dangers by seeing the indications as discussed. It's understandable how these steps seem overwhelming, but they're crucial for safeguarding your financial well-being. Ignoring the possibility of hoping for the best can leave you vulnerable to the consequences of a banking crisis. Exploring alternative financial systems and strategies. A crucial tactic to protect your assets in the event of a bank collapse is diversification. It can lessen the effect on your whole financial portfolio. Consider dividing your investment portfolio among other asset types, including stocks, bonds, real estate, and commodities. Explore other financial structures such as decentralized financing, DeFi, which uses blockchain technology to deliver open and secure financial services. Always research and understand the risks associated with these systems before participating. During the financial crisis of 2008, some individuals who diversified their investments across various asset classes managed to mitigate the impact. Additionally, communities that established local currencies or barter systems could maintain economic stability when traditional banking systems faltered. Practical steps to protect your savings and investments. Did you know that there are reasonable steps you can take to protect your savings and investments? Let's go through the possibilities. Ensure that your deposits are within the Deposit Insurance Regulatory Authority's limits. Diversify your savings across multiple banks to reduce concentration risk. Consider holding physical assets like gold or silver, as they can serve as a hedge against financial instability. Maintain an emergency fund that covers several months' worth of living expenses, providing a buffer during uncertain times. You may also take help from many books like The Intelligent Investor, which offers valuable insights into investment strategies. Acquiring survival skills and resources. While not specific to financial preparation, acquiring survival skills can be valuable in navigating a bank collapse scenario. You must have frugality, self-sufficiency, and budgeting abilities to adjust to changing circumstances. Through instruction and independent research, increase your understanding of personal finances, investments, and risk management. These may sound confusing, but you must work on these starting today. After all, it's never too late. Staying informed. It is best to keep yourself informed about the state of the banking industry. Many ways in the modern world today help us stay up to date. Here are some steps you can take to stay informed. Follow financial news sources. Frequently read reliable financial news sources to be notified about market trends, economic data, and legislative changes. Newspapers, websites, and financial news channels offer insightful analysis of the banking industry. Subscribe to industry publications. Join mailing lists for trustworthy magazines or newsletters in the banking and finance fields. Participate in financial forums or communities. Participate in online discussion forums or groups where money-related issues are covered. Doing so lets you meet others who share your interests and gain knowledge from their experiences. Stay updated on regulatory changes. Observe any regulation adjustments that may influence the banking industry or your financial choices. Keep up with the latest information from central banks, government agencies, and financial regulatory bodies. Maintaining financial stability and independence. Prioritizing financial stability and independence is crucial, even in a failing banking system. Live within your means and pay off a debt to improve your financial situation. The best course of action is to invest in your business acumen and skill set to develop new revenue sources. Consider creating partnerships or cooperatives within your community to support regional businesses and foster resilience. Considerable legal and regulatory aspects. You must know various legal and regulatory aspects while preparing for a bank failure. Keep the following in mind. Deposit insurance. Become familiar with the deposit insurance program in your nation. By guaranteeing a specific portion of depositors' balances in the case of a bank failure, deposit insurance offers protection to depositors. To protect your cash, be aware of the coverage limitations and make sure your deposits stay within them. Regulatory shifts. Keep abreast of regulatory shifts affecting the banking industry and your financial choices. Modifications to banking rules or practices may impact investors, borrowers, and depositors. To stay informed, keep up with news from regulatory entities, including central banks, financial regulators, and governmental organizations. Legal rights and remedies. Recognize your legal rights and options if a bank fails as a depositor or investor. Learn about the rules and legislation for bank failures, insolvency processes, and depositor safeguards. If necessary, get legal advice to ensure you're informed of your rights and options in case of a bank failure. Consumer protection laws. Be informed of the laws and rules governing consumer protection that apply to financial services. These regulations impact consumer interests and guarantee that financial institutions operate fairly. Knowing your rights as a consumer can assist you in making educated choices and pursuing the proper remedies in the event of wrongdoing or unfair treatment. Legal and financial guidance. Consult with experts on banking and finance for legal and financial guidance. They can advise you on legal matters, contractual duties, and viable courses of action to safeguard your interests in case of a bank failure. Potential long-term effects. The possible long-term impacts of a bank collapse may significantly impact individuals and the economy as a whole. Here are a few potential long-term consequences to take into account. Economic instability. A bank failure can result in a generalized economic downturn that affects consumer spending, company closures, and loan availability. It can lead to a prolonged economic slowdown, fewer investment prospects, and job losses. Loss of investments and savings. People who have savings or money tied up in a bank fail risk losing their fortune. It may affect their financial stability, retirement plans, and capacity to achieve future financial objectives. Credit crunch. The inability of people and companies to get loans or credit from other financial institutions might be brought on by a bank failure. Because of this, they could be unable to invest in new firms, make significant purchases, or grow their existing ones, which would hinder economic progress. Trust and confidence. Bank collapse often results in the loss of people's faith in the financial system. Ultimately, it results in refraining people from indulging in any activities involving financial transactions and contributing to the economy. We can learn from well-liked films or television programs that examine financial crises or economic instability, such as The Big Short or Inside Job, to appeal to a broader audience. These films stress the importance of recognizing threats and taking preventative steps to safeguard one's financial interests. Reviewing and updating insurance coverage. Reviewing and updating your insurance coverage is crucial to preventing a bank collapse. Ensure that your current plans, such as those for homeowners, renters, or vehicle insurance, offer sufficient protection against accidents or other damages. Furthermore, consider acquiring insurance plans that protect against financial hazards, such as credit or income protection insurance. These plans can serve as a safety net in the event of a job loss, a disability, or other circumstances that might make it challenging to meet your financial obligations. Regularly reviewing and updating your insurance coverage helps to further safeguard your assets and financial stability by lowering the potential economic impact of a bank failure. Protecting yourself from a bank collapse requires vigilance, diversification, and informed decision-making. You can minimize the impact on your financial well-being by recognizing the warning signs, exploring alternative economic systems, taking practical steps, acquiring survival skills, and staying informed. Real-life examples and case studies emphasize the importance of preparation while integrating pop culture, and news enhances the understanding of broader audiences. Never think that anything is impossible to happen, only to regret it later. Remember, proactive measures taken today can safeguard your financial stability and independence, even in a collapsing banking system.